Over the last couple of weeks, GDX has finally broken out of this downtrend line, which, by the way, has been in place, has been respected for nearly a couple of years already. We start seeing the market getting a little bit more excited about precious metals, so let's talk about those, specifically gold. By the way, if you scroll for some of the older videos on my channel, you'll see that somewhere around mid to late February, I was suggesting that the intermediate cycle low was about to happen. We were suggesting a rally into a new intermediate cycle, and looking at the price of gold, that's exactly what happened. We see that the intermediate cycle has actually started on the 14th of February. Since then, gold price has rallied quite significantly from around $2,000 to over $2,300 right now. This rally so far has been going on for 55 days. This is the first daily cycle of this intermediate cycle. As you see, historically intermediate cycles in gold do last for around a half a year, although sometimes they can stretch longer than that and shorten for as short as just 3 to 4 months. Within these intermediate cycles, we have the short-term daily cycles denoted by these upward arrows on the chart. And this first 55-day long rally so far is within the first daily cycle of this new intermediate cycle. Daily cycles usually last for around a couple of months, although they can sometimes stretch to as long as, say, 3 months. But based on the average duration of these daily cycles, we are perhaps close to some sort of a temporary top, the top for the short-term daily cycle, while the intermediate cycle might continue chugging along higher after a bit of a correction down into, say, this daily cycle low. Looking at some technicals specifically for this daily cycle, one might observe a bit of a bull flag between the middle of February and early March, a bit of a flagging pattern over here all through the middle of March. And technically a measured target for this breakout from the bull flag is a similar type move to the Powell formation. That is around $200 move for the Powell. Adding that to the breakout gives us a target of around 23.80. Gold price is right now at $23.56, $2,356 or so. So while gold might still continue higher for a short while, it is in the shorter term getting somewhat overheated. This 14-day RSI is quite a lot into overbought area as well, so that also suggests that some level of caution isn't a bad idea. Next, looking at gold miners, that's GDX. Let me zoom out for a little bit here, and we see that GDX is approaching some sort of a resistance that has been respected multiple times for the last couple of years. That's somewhere around the level of $36. Yesterday, GDX came as high as 34, so again, while there is some possibility of an upward momentum in the short term, there might also be a sense in tightening up those stops. Just in case if GDX, say, tries to retest the breakout, or at least retest the previous intermediate high around $32.2. Next, it's quite important to look at market sentiment. We're now looking at optics for gold. Usually, these intermediate cycles top with the market sentiment closer to this red line. While the optics hasn't reached the red line yet, we are already at 73. So again, while there might be a little more of an upward momentum in the short term, again some caution is advised as we are getting closer and closer to this red line, as the market is becoming a little bit too excited about precious metals. The situation is somewhat similar on miners themselves. This is GDX. The optics on GDX, which is quite volatile, as you see, jumps up and down quite a lot. So for that reason, I like to add the 10-day moving average of this optics. That's this solid green line at the lower half of the chart. And even this 10-day moving average of this optics is also approaching the red line. We're currently at 77 for this 10 DMA. And while GDX optics itself is at 68, it has already poked above 80 several times. So to sum up the video in one sentence so far, some caution is advised as the daily cycle is approaching its usual duration, meaning that a decline into the daily cycle low is pretty likely sometime soon. Additionally, gold is getting a little overheated with RSI well into overbought area and market sentiment approaching excessive optimism levels. But There is also a bullish sign on the market looking at DXY, that's the dollar index here. Usually, but not always, gold price and dollar index do move in the opposite direction, and looks like the DXY here has topped for its second daily cycle. The cycle is now 32 days long. Usually these cycles last for around a couple of months, so there is perhaps in general 2, 3, 4 weeks of downward momentum that is likely in a dollar index, which might support gold price even further in the shorter term. So while I would not suggest selling your precious metals allocation, not at all, but what I'm personally doing, and I do show all my trades to the members at myfinanceteacher.org through this model portfolio. So what I've done is I've taken a little off of those positions as gdxj over here has approached its resistance level, and similarly GDX, as I said, is about to reach those resistance levels above $35 relatively soon as well. In those cases I would take some positions off the market, tighten up the stop losses, and wait for the next daily cycle low to re-enter for the next push into the continuation of the intermediate cycle. That's all for now. For much more regular and detailed updates, make sure to join us at myfinanceteacher.org. Just scroll down a little and click this Join Now button. Have a terrific Tuesday. Bye bye.